For years, the United States dollar has been the unquestioned center of the global financial system. Countries around the world have parked their wealth in American debt, trusted U.S. Treasury bonds as the safest investment on earth, and relied on the dollar as the backbone of international trade. But something historic is happening right now that almost nobody in America is paying enough attention to. China, the second largest economy in the world, is quietly walking away from U.S. government debt. And they're not doing it slowly. They are doing it consistently, month after month. With a clear and deliberate strategy, China is reducing its financial ties to America. According to official Treasury data, China has now reduced its holdings of U.S. bonds for 9 straight months. Their total ownership has fallen to levels not seen since 2008, a 17-year low. At the same time, China is doing something very different with its money. Instead of buying American debt, they are aggressively buying gold. For more than a year straight, month after month, the Chinese central bank has been adding to its gold reserves. This is not random. This is not normal portfolio management. This is a long-term geopolitical move. To understand why this matters, you have to look at the bigger picture. For decades, China was one of the largest buyers of U.S. Treasuries. At its peak, Beijing held more than $1.3 trillion in American debt. That made China one of the biggest financial supporters of the U.S. government. But today, that relationship is breaking down. China's holdings have collapsed by nearly 50% from their peak, and the speed of the decline is accelerating. In just the past year alone, China has sold more than 10% of what it still owned. Meanwhile, other countries like Japan and the United Kingdom are increasing their treasury holdings, but China is moving in the opposite direction. This tells us something extremely important. The world as a whole is still buying U.S. debt, but China specifically is losing confidence in America's financial future. And the reason is not hard to understand. The economic relationship between the United States and China has turned into open conflict. Massive tariffs, trade wars, sanctions, and political hostility have completely changed the rules of the game. From China's perspective, why would they continue lending money to a government that is actively trying to weaken their economy? When tariffs on Chinese goods rise to extreme levels, it forces Beijing to rethink everything. Holding hundreds of billions of dollars in U.S. debt suddenly becomes a strategic risk rather than a safe investment. And that is exactly what we are seeing now. At the same time, the United States national debt is exploding. America now owes more than $38 trillion. Deficits are growing every year. Interest payments on that debt are becoming one of the largest expenses in the federal budget. From the outside looking in, the long-term stability of U.S. government finances no longer looks guaranteed. So China is making a rational decision. Instead of keeping their wealth tied to American debt, they are shifting towards safer alternatives. They are choosing assets that cannot be controlled or frozen by Washington. And the number one asset that fits that description is gold. Gold does not depend on any government. Gold cannot be sanctioned. Gold cannot be printed. Gold cannot be seized with the push of a button. Ever since the United States froze hundreds of billions of dollars in Russian foreign reserves in 2022, countries around the world have quietly started asking a dangerous question. What if the same thing happens to us? For nations that do not fully trust American politics, gold is becoming the ultimate insurance policy. And China is leading that movement. Their gold reserves have been steadily rising, while their dollar reserves shrink. The percentage of China's total reserves held in gold has jumped sharply in just the last year. This is not small, routine diversification. This is a strategic repositioning away from the dollar-centered system that has existed since World War II. And it is not only China doing this. Central banks all over the world are increasing gold holdings. The share of global reserves held in U.S. dollars has been slowly declining for decades. More and more countries are searching for alternatives, whether through gold, new payment systems, or regional trade agreements that bypass the dollar entirely. This does not mean the dollar will collapse tomorrow, but it does mean something much more subtle and important. The era of absolute dollar dominance is slowly fading. For the United States, this shift carries serious consequences. If one of the largest buyers of U.S. debt walks away, someone else has to replace them. And usually, the only way to attract new buyers is to offer higher interest rates. Higher rates mean the U.S. government pays more to borrow. Higher rates mean mortgages get more expensive, car loans get more expensive, and business investment slows down. In other words, China selling treasuries does not just affect Wall Street. It eventually affects every American household. Meanwhile, China has shown that it can survive the economic war far better than many expected. Even with extreme tariffs in place, Chinese exports have found new routes. Trade flows have shifted through Southeast Asia, Latin America, and Europe. Beijing has diversified its markets and reduced dependence on the United States. From China's point of view, they no longer need America the way they once did. And that is a massive change in the global balance of power. What makes this situation even more remarkable is that America's economic strategy has not achieved its main goals. Tariffs were supposed to bring manufacturing back to the United States. They were supposed to weaken China's economy. They were supposed to reduce trade deficits. But the data tells a very different story. Manufacturing growth in the U.S. has struggled despite years of aggressive trade policies. Supply chains have simply moved to other countries instead of returning to America. And the trade deficit has actually grown larger instead of smaller. Instead of forcing China to submit, the trade war has pushed Beijing to accelerate its financial independence. So where does this all go from here? The most likely outcome is that China will continue reducing its Treasury holdings gradually. They are doing it carefully so they do not crash the market. But the direction is clear. Gold purchases will probably continue. Efforts to create non-dollar trade systems will expand, and more countries will quietly follow the same path. The global financial system is slowly becoming more multipolar. Instead of one dominant currency, the world is moving toward a future with several competing centers of power. For decades, the United States enjoyed what economists called an exorbitant privilege, the ability to borrow endlessly in its own currency. It could print money without immediate consequences and use the dollar as a tool of political power. That privilege is now being challenged in ways it never has been before. None of this will happen overnight. The dollar is still strong, and the U.S. financial system is still the largest in the world. But trends matter, and right now, the trend lines are pointing in a very clear direction. China is reducing its exposure to America and reshaping its financial future. China is increasing its exposure to gold, and the rest of the world is watching carefully. The financial order that shaped the last 70 years is beginning to shift. And whether Americans realize it or not, these quiet changes in bond markets and gold reserves could end up reshaping the entire global economy. The question is not whether the world is changing. The question is whether the United States is prepared for what comes next. Because for the first time in a long time, the data suggests that America can no longer assume it will always be the center of the financial universe. And that may be the biggest economic story of our generation. The global system is evolving, alliances are shifting, and financial power is slowly redistributing. What once seemed permanent now looks uncertain. The decisions being made today in Beijing and Washington will shape the next era of global economics. And the outcome will affect markets, currencies, and ordinary people all around the world. This is more than just bond sales and gold purchases. It is the beginning of a new chapter in global finance. The world is changing, and the dominance of the US dollar is no longer guaranteed. Understanding these shifts is critical for anyone who wants to understand the future, because what is happening now is not a small adjustment, it is a transformation.